Hi friends, welcome to Saral Trader. We are going to do the review of the futures markets. This is S&P 500 chart. Now S&P 500 was in a downtrend, and this downtrend continued, and then there was a fake signal here, and then there was a major downtrend again that started from 5610. We almost went down how much? Almost 600 points. And from there, markets again rebounded and we got a swing signal here, which was 5510. And after that, there was multiple buying opportunities that came in, and we are trading above the key pivots also. So I feel that we have already achieved the short-term targets on S&P 500, and now while the trend is completely bullish and we are trading above the 100-day moving average also, one more close above the 100-day moving average will confirm that the market is in the bullish grip. And we might be in a situation where we will make a new uh, all-time highs. Now all-time high here, if you see, is at 6166. Okay, so 6166, and we are currently trading at 5710. So we are just around 9 to 10% away from the all-time highs, and the recovery has been extremely sharp. So one more day we trade above 100-day moving average, we will be moving, we will confirm the bull trend, and most probably we will again make a high. It can go sideways for a while. Now on the downside, 5550, which is 5500 and 5550 and 4550 will be very strong area of demand. So if you get a retracement here, market falls, and as long as we are trading about 5400 on daily basis, only long opportunity should be taken. We have a long bias, of course. And if you look at the short term charts, also in the short term also there were a lot of trading opportunities which Saral was getting, and now we are in a good bullish grip. If you see, 5550 is a 10-day moving average, then you have 5400 is the 21-day moving average. So look for long opportunities here. And then let's see crude oil. In crude oil, we have an open trade. So crude oil gave a buy signal here, and then it gapped up also when the markets open in the evening last Sunday, 5 o'clock when the market opened. It gapped up, but then there was a continuous selling pressure, and again this low was challenged. It went down further below, but there was a lot of buying that came in. So I feel that this downtrend with the lows of 56 that is created here, we this is almost the bottom. I think we will make a move towards 64 again. So we are holding on to a long position with hedges. Now, if you don't have hedges, it could have been very devastating. So we are holding the hedges, and we still have how many days in expiry? So this June expiry, let's see, I'm just trying to see the options chart. So this June expiry is, we still have 11 days for the expiry of this monthly contract. So we'll hold our long position, and based on how, whenever if you look at the smaller time frames, on smaller time frames, there was one attempt which fizzled out. I think we'll wait and we'll roll over our hedges or roll over our futures. We still maintain the bullish bias on the crude oil in the short term. So that is one. Now, if you look at the gold charts, in the gold, we had a short trade on which we booked the profits. We shorted somewhere around 5340, and we got almost a full target here at 5247. We exited somewhere around 70-80 points gain. But this was one good trade. We are out of gold now. Now for gold, we will again wait to see if we can get another signal, and then we'll take the next position. So gold is one trade that we closed. Now another trade that is currently open for is the wheat. So wheat, we entered around 530. We are already up around 3%, 2.75. So Now with this, we can again go sideways for a while, but the far target of 556 is something that we are looking at, and that's where we will exit. So wheat is going good. We are long in wheat both on the ETF side, which is WEAT, and we are also long in the futures with hedges. Now, if you don't hold hedges, it becomes very difficult to trade futures, especially the large lots. So always trade futures with hedges. Now, this is wheat, crude, gold, and let's look at MNQ, which is the Nasdaq. Now, Nasdaq was in a very sharp momentum. There were very good results. If you see, this is Saral 2 trending system. We got the signal, and I was, caught intraday in the short side. I was able to maneuver out of it, but it's very risky. You should not short something which is going up, especially above 20-day moving average. Now it was operating in a smaller range for 3 days, and then if you see, there was a sharp fall which came in intraday on some news in the morning pre-markets. Most of the falls in the pre-markets happen in the pre-markets. So pre-markets, most of the data comes in the pre-market. So if something is trading above 10-day and 21-day both, and there is a pre-market fall, sharp fall, always buy those. Of course, you should be with the hedges. Generally, you will see that you will get your targets in couple of days. So this one, Nasdaq we didn't buy, we bought the RTY, but then this is now again trading above 50-day moving average for 2 days. This bullish confirmation is there. There is some resistance here. So the support range for, if you look at the support range, is 19,000 to the level of 19,700. There is a very strong demand zone. Even at the 18,800 levels, there is a huge demand zone. So in this area, if you get the opportunity to buy with the hedges and give it another at least 1.5 months, I am expecting a very sharp move in Nasdaq, which is going to take out the recent high of 22,500 also. So there is a new all-time high possibility. Of course, this is just an opinion. We can be wrong, and we can make a new low also. But then we will always be hedged. So markets can only, we don't control the markets. The only thing that we control is how much we will lose when we are wrong. And I have taken a view that we are going up. So I will hedge my position. If we go wrong, that's a business loss, right? And also, we can always roll over our hedges and come out of it. We can sell some calls or something. So generally, this is my opinion. The only thing I see here is that this line, which is a 63-day moving average, is showing a downward slope. That is the only thing. That means there is a lot of sellers who are stuck, and their losses are widening. So let's see how this goes. And then the small cap index. The small cap index is the index that I trade positionally intraday also. Now again, very similar structure. There was a bullish bias. There was a green candle above 21-day moving average. This was entirely sold. Then there was another candle which was, and this was the confirmation that markets are in the bullish grip. Then 3-4 days we were sideways, 5 days we were sideways, and then there is a breakout. Now my view is that this is confirmation that the bulls have completely taken control. Now this level 22, again the level of 1900 to 1950. If you go long, buy your hedges, and the risk reward is very favorable for long-term target. Short-term target will be 2150, which is say around another 3 to 4 weeks. You should get that most probably. And the long-term target, again, the idea is the first target, that the long-term target for this will be 2400. So we are very bullish now. Of course, if you want future signals, we cover ETFs, stocks. You can join my channel. There is a free channel that we have on Telegram where we share a lot of setups, ideas, views about stocks, and we share all of research reports from different brokerage houses on different companies. A lot of free information is given there. We also share intraday levels for SPY. And then we have a futures channel. So if you are trading futures, You can look at our swing trades on futures as well. So let me know if you have any questions. Thank you very much. Happy Saral trading. Bye bye.